Hello guys and welcome to Daily Market Movements. Welcome to another episode of Indices Watch. In today's video we are going to be analysing the NASDAQ100 and the S&P500 price chart. So today we are looking green. The NASDAQ is currently up 1.47% and then moving over to the S&P500 we're currently up at roughly 1.29%. So a nice bounce back from yesterday's losses. This way of trading that we have been doing so for the past couple of days, in fact since the end of last week on Friday, is what I like to call yo-yo markets. And the reason I like to call it yo-yo is, I'm sure you can all guess, is because we're up and down, up and down. And I think I mentioned this on Tuesday that, this is something I do expect to see. Last Friday when we had that huge crash in the indices, well, I wouldn't say crash, but we had that massive pullback in the indices. So S&P 500 here, for example, fell roughly 3% in one day, which is quite a large drop to have in one session. And then of course the NASDAQ 100 fell roughly 5%. And what has happened over the past couple of days is that on Friday we had that big pullback, and then on Monday we bounced back because we probably oversold towards the downside on Friday, and then on Monday we probably bounced back a little bit too high. Maybe investors got a little bit ahead of themselves because there was still a lot of unsure questions with regards to this new COVID variant. And then of course yesterday we had Jerome Powell come out and cause some more volatility in the market, which then created fresh lows, and now today we're trading back in the green. So I wouldn't be surprised if we were to see ourselves trading in the red tomorrow. It seems to be one day green, the next red, one day green, the next day red. But eventually this will settle. And, I think it's very positive that we are settling above the 50-day EMA. We haven't seen any dramatic breaks below the 50-day EMA in the S&P 500. And of course, the NASDAQ 100 is still quite far away from the 50-day EMA. In fact, we are roughly 3.63%. So far, the rumors coming out of South Africa and, from scientists across the globe who are currently analyzing the data and trying to analyze how dangerous this new variant is. So far, apparently, it's actually not as bad as first anticipated, which is fantastic news, especially for the S&P 500 and the NASDAQ 100. But before we go into any more detail about today's video and analysing the NASDAQ 100 and the S&P 500 as to where I believe they may be heading next, let's first talk about yesterday's decline, because yesterday was a very big day. In fact, we had some breaking news coming out of Washington where Jerome Powell and Janet Yellen were testifying in front of Congress, and comments were made by Jerome Powell, the Fed chairman, that he hopes to finish the tapering process, so to finish it completely, the $120 billion of money being injected into the financial markets. He wants to finish that process a few months earlier than initially stated, and that sent the markets crashing yesterday, especially the NASDAQ 100. I think we fell the hardest here in the NASDAQ 100 compared to the S&P 500 and the Dow Jones 30. So the markets really did not like this news. But then, of course, today we have now woken up and we're trading in the green. And the reason being is because traders have had a step back and they've said, okay, well, hang on a minute. The tapering process is probably going to end a lot quicker than we initially thought. But as well as that, the first interest rate hike may be brought forward as well, because typically speaking, after that tapering process is complete, you then have the first interest rate hike. But investors now have the senses that the strategy of how we will begin to hike those interest rates, because we're not just going to hike it once. There'll be a second, a third, a fourth, a fifth hike, later down the line. But that may be more spread out. So, we were expecting to start the tapering process, have it finished by mid next year, and then boom, straight into our first interest rate hike. And then the end of the year, bang, a second one. Where now it might be okay, where we might finish the taper come Q1 next year. And then we may have that first interest rate hike, but the second one might not come until mid 2023. That's where they can really step back and take the foot off the gas, because they've had that first interest rate hike. So I think that's why the markets are bouncing back during today's trading session. So very interesting. I think it's a very fundamental market at this moment in time. It's not looking very technical. Of course, we've been trading in this uptrend since that massive sell-off that we had all the way back in. If we just zoom out, all the way back in March 2020. It's been a real nice trend here in both the S&P 500 and the NASDAQ 100, and I don't really expect this trend to change in the near term, especially not until 2022 at least. I think December, historically, it's a fantastic month for the stock market, and I think that we will see some more upside movements here. So as you all know, I currently have a buy position along with my private Telegram link. If you would like to join that group, then please watch the clip towards the end of the video where I explain how. But we open all the way down here at the 50-day EMA for the S&P 500 down at 4,580, and then on the NASDAQ 100, we opened it all the way down up the swing lows. In fact, we cherry picked the bottom here and we opened that position down at 16,050. So both trades are trading nicely in the green at this moment in time. If you're watching this video on YouTube, I would not recommend getting involved due to the fact, you know, the risk reward ratio. If you was to, you know, if you're watching this video and you're thinking, oh, fantastic, Max is aiming for 17,000. Well, let's buy it now. Well, look, you could potentially gain 3.86 towards the upside, but you're risking about 6% towards the downside. So the risk ratio, is no longer in your favor. So again, this is why it's very important to be part of the Signal team and the streaming service. Of course, I post more in-depth videos over on our website, so you can watch the end of this video to see, but we charge a very small fee of $19.99. So it's really, really cheap. And the reason I put it at such a cheap price is so that everyone can get involved. But I thought I'd just come on here today just to give you a brief update with regards to the NASDAQ 100 and the S&P 500. We're looking positive at this moment in time, but do be wary. I do anticipate for plenty more volatility, especially as we get new news from this variant. And as I mentioned, we are currently trading in yo-yo markets, up, down, but eventually the swings will become a lot less violent. So I do expect this market to balance out. But things are looking positive as long as we can stay above those 50-day EMAs. And that is going to wrap it up for today's video. But just before I let you leave, I just want to quickly show you our brand new streaming service. We've recently launched this website that you can see in front of you. This is where we provide in-depth analysis videos as well as trading signals via our Telegram group chat. How it works is really simple. We have two subscription plans. First one is a monthly fee of $19.99, and the second plan is only $209.99 for a year's subscription. Once subscribed, you'll then have access to all of our in-depth analysis videos, as well as access to our private Telegram group chat. We cover various markets such as commodities, US stocks, indices, and cryptocurrencies. We also have a video category where we provide educational content so that you can improve your trading skills. If this sounds appealing to you, then you can find our website link in the description of this YouTube video at dailymarketmovements.com. If not, then I would just like to take this time to say thank you for watching today's YouTube video. Please give my channel a subscribe and give this video a thumbs up. Thank you very much, and I hope to see you again soon.